we have come a very long way. This forum will discuss issues such as how to use big data. This forum will even discuss blockchain technologies. This forum will also, of course, look into the new players. Some people, as I learned yesterday in the PPD meeting, call them the true disruptors, who are now taking on a role in rolling out these services. So technology has taken us a very long way, and of course this comes with new questions, challenges and risks, but also opportunities. So I think that's one dimension. The other dimension I want to mention is we have been coming from access. When we started in, again, 2009, most of us were looking into access. Then it became usage, and we moved into quality. And now I think members more and more are taking a challenge to look into socio-economic dimensions, gender equality, environmental sustainability. And also I think we are learning that there's recent research that demonstrates that financial inclusion is an enabler or key enabler of economic development and sustainable growth, which again positions us very nicely within the Sustainable Development Goals. Another dimension, very simple, is, you know, when I started with AFI during this, or that time, I should say, I think we also were aware that this is mostly about, in fact, making payments. And now we see even intermediation taking place. There are places like Kenya where you can actually make a loan through the mobile, which again is another dimension of financial inclusion, because we all learned that making a payment can be a good start to include a person. Is maybe the simple service that can make a huge difference in a poor person's life, but intermediation is, of course, what drives investment, savings, investment, and growth. So I think we have come a long way when you look at these dimensions. Now, what is important to see is that there are examples of members, which I would like to quote, who are dealing with these new dimensions, especially around the Sustainable Development Goals. For example, we see Bangladesh Bank, Microcredit Regulatory Authority, and the Ministry of Finance in Bangladesh. They have made a joint commitment to increase green finance among loans disbursed by the banking sector. And the Reserve Bank of Fiji recently made a new commitment to work with partners on developing and promoting sustainable business models to support communities' response to climate change. This really, I think, showcases where we are coming from and where we are going to, again, through these commitments. And the link between green finance and financial inclusion becomes very obvious. Similarly, on gender, I think we see that, for example, several central banks from this region, from the Pacific region, set quantified targets on financial inclusion for women. And other examples include Bank Negara Malaysia's commitment to establish a database on account ownership by gender, as well as the Royal Monetary Authority of Bhutan made a commitment to implement financial literacy program with focus on gender equity. So I think these examples show you where we can go, and I think, to answer your question finally, to play an effective role in order to drive these developments, I think the Alliance will continue to or enhance on the peer learning efforts which are needed, in fact, to see the developments that we are looking for under the Sustainable Development Goals and the Addis Ababa Action Agenda. But we will also, I think, put more focus on making use of the partnerships that are out there. These are low-hanging fruits, it seems, and some of the partners are also on this panel. So I think we all need to work together, because it seems that one actor, one group alone cannot make it happen. So this means we will also, of course, enhance our collaboration with the private sector firms and maybe invite the true disruptors in this field to see where the journey is going to take us. And it very much looks like that the future of banking, as you know, Daniel, will look very different. So we need to bring these people to the table, as well as the standard setting bodies, multilateral organizations who are leading in this field, such as the World Bank, international donors, such as the Bill and Melinda Gates Foundation, and even UN organizations, who work on issues such as refugees and environmental programs. So this is, I think, where we are going to enhance on the Maya Declaration, include commitments which are well embedded in the Sustainable Development Goals, and of course, move forward with peer learning and partnerships to make these things happen. Thank you.
Thank you very much, Albert. If I may, please, we're going to turn we're going to turn to Madame Monique. If you might have your opening thoughts on this matter, please. Can somebody turn on the mic, please?
It's back. Thank you, Chairman. In my opening remarks, I want to address the keyword sustainability, and financial inclusion. I'll start by saying Mbula, and also bringing you greetings from Rwanda. Rwanda is an active member of AFI, and on this journey of financial inclusion, we've come a long way. We've seen in a span of 6 years, financial inclusion, formal financial inclusion, climbing from 21% in 2008 to 42% in 2012 to 68% in 2016. And the total exclusion reduced to only 11% last year. Women financial inclusion formally doubled to 63%. That was from 36% 4 years ago. But we are seeing a gender gap that is closing, but still high. On formal inclusion, the gender gap was 18% 2012. Now it's at 11%. It's even higher than the 9% globally on formal inclusion. So the reason I'm giving these numbers is one of the pillars for sustainable inclusion for me is you must have evidence. If you have evidence, it helps you to set a baseline. It helps you to set quantifiable targets. It helps you to keep monitoring, and it helps you also for accountability. And these are really key issues you have to look at if you want to be sustainable and you want to show commitment. And a second level of sustainability, I would say, is innovation. Innovation is key. You have really to support the efforts by really encouraging, challenging the status quo and what used to be the way of doing business. So in our case, we innovated around during these 6 years or 8 years. And one of the innovations was the SACCOs, the savings and credit cooperatives at the grassroots. This really helped us a lot, and we even won an award from AFI in 2014 for that. Another innovation was the agent banking, the digital financial services, and now, this year, we have enacted a regulation into the consumer protection. There is a regulation on what we call the key fact statements. So we want financial institutions to really come out and be accountable on certain things they are doing, on the charges they are charging, on their APR. We have standardized an APR which is going to be published so that really consumers can compare and know that what they are paying is not just that interest rate, but there are also charges, there are this and that. So those key fact statements is a key thing we are doing, and even we are requiring to report on the gender composition of the members of the board, senior officials within financial institutions, and so on and so forth. So that's really, we are innovating so that we can help ourselves to come up with sustainable solutions. We have of recent enacted deposit insurance, which is also going to look for re-protecting small savers, including the digital financial services and mobile accounts. A third step to sustainability is really institutionalization. That's key. You must really institutionalize. Go beyond individual or personalities to really institutionalize through laws and through mechanisms. And one key feature of institutionalization for me is to build the capacity, on the one side, for the people to demand the financial services, and on the other side, the financial institutions to supply. So building capacity both ways is key, because I've realized that most of the time we are not really achieving financial inclusion because we lack the will to do so, but maybe we are not really exhausting ourselves in terms of how to do it, and realizing that there is a market value in financial inclusion for both genders. That's the third one, and my last one will be create champions and partnerships. I think it's key if we want to really to institutionalize. So I'll leave it at that as a way of my opening remarks to the topic.
I will turn to Minister Ayaz to give us his thoughts on these matters.
Good morning, ladies and gentlemen. I'd like to very quickly just perhaps pick up on one of the themes that the moderator mentioned earlier on, and that is essentially to have this whole dichotomous approach towards the market, and sometimes the market obviously does not necessarily do the right thing, and how you can actually intervene, and the manner that you intervene into the market must be not a intervention that in somehow or the other would deflate the market's dynamics. And I think that is always the trick. In Fiji's case, obviously, we have a constitution which we're very much proud of, and it includes the right to economic participation, but that in itself obviously is not sufficient, because you need to have built in various other safeguards. So for example, we have a section 26 of the constitution which talks about unfair discrimination directly or indirectly. So you talk about not just ethnicity, etc., but now we have included, in fact, you cannot be unfairly discriminated against on the basis of your health or your social status. It includes also specific grounds for unfair discrimination if you are pregnant, and also if you are married. So that addresses a number of sort of gender type issues. Now, apart from this, the Honorable Prime Minister mentioned this morning, we also have a right to have clean drinkable water, right to shelter, right to basic health services. Now, what that does is actually it creates the need for any government to come in to ensure that those demarcators actually are ticked off. So you are actually targeting those people who do not have access to that. So you're creating, in fact, a level playing field, or at least bringing them up to a stage where then they're able to somewhat in a tangible manner participate in the market. And I think that is very, very critical to ensure we have that. In the same way that we mentioned, we may talk about gender empowerment. Sometimes it's a very good verbiage, but in practical sense, if you don't actually follow it up with some practical laws and regulatory frameworks, it does not mean anything in a practical manner. To give you an example, most of the people you are staying at this hotel, most of the people who serve you, who clean your rooms, who wait on you, they are women. Now, if they are being bashed up at home the night before, because generally most of us come from patriarchal societies, and if we do not treat domestic violence as a matter that needs to be discussed in the public space, as opposed to being relegated to the private space, then we won't be able to discuss this issue. But purely from a commercial perspective, it affects your levels of productivity. It affects your rate of absenteeism. So similarly, those women who may not be working, who may be, for example, selling fruits and vegetables by the roadside, if similar practices do take place, their ability to then participate in the market is again limited. So we need to have the right regulatory framework being put in place to ensure that these fundamental issues are addressed. We have our Minister for Women here. She has a expo for women every year now, very successful. She brings in women from all over Fiji. We have 320 islands, 110 of which are habited. Only 60% live, or about 60% lives on this major island. She brings them from all over Fiji, where they should display their various, in particular, arts and crafts. And a lot of them are very good. Now that ties in well with what the Minister for Industry and Trade is doing. He has now what we call 8 categories of Fijian made, Fijian crafted, Fijian grown, Fijian sewn, Fijian produced. All of these categories are actually certified. So if these women, if we tie them up to the duty-free stores to which you will go to, and please look for that logo that says Fijian crafted. Now, that actually helps them being tied up with the market. But for her to be able to get them out to Suva or wherever it is where they have the expos, we need to ensure that they actually have the ability to be able to come to the marketplace, to the expo, to participate, fully as a full individual with her full capacity. So I think it is very, very critical. What is also really important also is that the private sector tends to get left out of it. Our Bill of Rights, and traditionally throughout the world, there has been a focus on what we generally call civil and political rights to the detriment of socioeconomic rights. That has always been relegated. Sort of previously used to be seen something that the socialist countries did. But in fact, it is very, very critical because, as was highlighted by the moderator, you could actually have a socioeconomic issue that actually could escalate into a political issue. So in order to actually stop that, you need to be able to address the socioeconomic issue itself. So for us, it is very important to ensure that we have all the players being part of it. So our Bill of Rights, ladies and gentlemen, actually applies, or it has what you call a vertical and a horizontal application. Previously, the Bill of Rights could only be enforced against the state. Now the Bill of Rights actually can be enforced against private actors within the state, or within the country itself. So you can have private companies against whom the unfair discrimination provisions actually can be taken up with them. Similarly, other Bill of Rights provisions that exist, even within socioeconomic rights, can be enforced against the private actor within the state itself. Just very quickly, what we have done, and I think, that is very, very critical for us to understand. You need to have the fundamentals in place to be able to then put in various initiatives, because that's when people will actually get to fully participate in the marketplace and also be able to give some tangible results. So for example, what we have done, as the Honorable Prime Minister mentioned about the national switch. Now, I think it's very important. We talk about electronic transactions, and this is something that's very, very close to us. Electronic transactions can tend to be quite expensive, and thereby you automatically are excluding a number of people from participating in the electronics transaction space. Now, if you have, for example, individual banks carrying out infrastructure costs to put up ATM machines, it obviously is expensive on them to be able to do that, and thereby the service cost increases. However, if you have shared infrastructure costs, where you have what one may call communal ATMs that everybody pays for, then the cost of the electronic transactions over a period of time will significantly reduce. Now that means those people who are not necessarily part of the mainstream financial space are actually able to participate. You may drive from here to Suva, which is the highway, it's about 3 hours away. There are many people, for example, who are, selling coconuts with straws, and some people may be selling flowers, etc., whatever the case may be. They are not part of the mainstream financial spectrum. They simply are able to sell their goods. They may pick the coconuts from their farms, or they may pick it from the bush, and they get their money, but they're not part of the mainstream financial space. If we had facilities, financial facilities, we don't expect banks to go and open up a branch there, but if you have electronic facilities available that can help them actually bank and help them to actually withdraw, suddenly they become part of that. But they're not going to do it if it's going to be expensive. Banks aren't going to go there if it's going to be very costly for them to go into that space. So I think that is very, very important for us to do that, to get into that space, and this is why the national switch is very much part and parcel of our view of including, the people being included within what we are saying about the mainstream financial system. I think the other point that I wanted to make is various other, areas that we are focused in Fiji. I do not necessarily want to give you a stock take of what we have done and what we are doing to bore you with that. Perhaps that's something we can discuss in the question time. But I think fundamentally the point I wanted to make, just to be very brief, is that we need to be able to address some of these fundamental issues that are what we call the enablers for people to more readily participate and be part of the mainstream financial system. Thank you.
Mr. Minister, very, very fascinating exposition, and certainly something we need to take back with us, all of us, because you've pointed out some things that are certainly very advanced. Now, let me turn to our distinguished representative from the Gates Foundation. Jason, if you would share with us your interesting findings.
Thank you, Danny. And Bula, are you awake? Yeah. Bula. So thank you very much for the opportunity to be here today. We actually especially requested this opportunity to speak to all of you because the Gates Foundation, together with McKinsey Global Institute, has been working on some research to help give you a greater fact base for why financial inclusion matters to your overall economy. And this research will be coming out in 2 weeks and will be made available on the AFI website and with other partners such as CGAP and, of course, with the McKinsey Global Institute. But we really view this group here, our AFI family, as the champions of financial inclusion, and because of that, we wanted you to have a preview of some of the data that's coming out of this report. One of the things that AFI really stands for is advocating for fact-based research that will help drive smart policies. And the Gates Foundation is 100% aligned with that thinking. And to that end, we thought, for the last couple of years, we've wondered to ourselves, how much does financial inclusion matter to overall GDP in the economy? If you were to get close to full financial inclusion, say 90%, and have equal participation of women, access to credit for small businesses, what kind of economic growth bump would that actually achieve? And so we engaged with McKinsey & Company and their think tank, McKinsey Global Institute. We spent 9 months doing a very rigorous research, which includes a proprietary model, a GDP growth model that McKinsey uses for most of its MGI reports. They do a couple of reports every year. So this is a pretty robust model. We did over 150 interviews across the globe. We visited 7 emerging economies, large emerging economies, 2 in Latin America, 2 in Africa, and 3 in Asia. And the results are pretty exciting. So I'll leave you to read them in full when the report comes out, but I wanted to give you the top line today. So I'll pause right here because the growth by 2025 in an average emerging economy is 6%. 6% growth to your GDP because of financial inclusion. That's a huge amount of growth. It's a big driver of growth, and it's actually just measuring the first order opportunity. Globally, that equals 3.7 trillion US dollars. So it's really, this crowd here is sitting at the driver of sustainable growth for each of your economies. And we appreciate that you all have known this, but now to have the data behind it is pretty tremendous. Let me tell you a little bit more about where that growth comes from. About 2/3 of the growth derives from the efficiencies that digital payments provide. So creating more time and faster transactions. Another third derives from greater savings and credit and the investment that provides in the economy for individuals, for small businesses, et cetera. So if you think about that 6%, that's just the average. Because we had these 7 countries that we looked at, if you're starting from a place of low digitization, then that percentage increase in GDP is closer to 10 to 12%. In Ethiopia and Nigeria, we found that was closer to 10 to 12%. If you're already at a pretty advanced digitization, such as Brazil, the increase in GDP is a lot more modest, but it's still around in the range of 4 to 5%. It's really a big bump to the economy. I think, I'll just mention a few extra comments, and then maybe if there are questions, we can talk about them later. But some of the key building blocks, first of all, is digital infrastructure, which includes digital payments and identification. I think being able to identify your citizens makes a very big difference in the ability to bring more people into the formal economy. The second is dynamic markets, and you all in this room know a lot about that because you spend a lot of time trying to encourage investment and growth, the right kind of policies that help bring businesses to your countries, and creating those dynamic markets matters. And then finally, and importantly for individuals, are the right sort of products that bring people and attract them into the formal financial sector. And this is particularly true for women who manage household finances in many different countries, and having products that are targeted towards them and that bring them formally into the formal financial sector is super important. You might think, how does this relate to sustainable growth in the overall economy? And I think some secondary effects of actually having everyone in your countries included in formal financial services is the ability to target price subsidies differently than they are today. So when price subsidies started, especially around fuel, it was basically a way to ensure that people had access to necessary products. I'll take the LPG gas example in India. When they had a price subsidy, it went to everyone that bought LPG gas canisters, and it accrued 70% or more to the wealthiest quartile of the population. What they did is they took away that price subsidy, and instead they gave payments directly to households in the amount that they wanted to target. And they found they saved $1.4 billion in the first year. So that was more money in the government's coffers to be able to provide public services. But they also had a decrease in the use of LPG gas because the price wasn't no longer subsidized, and in fact, people used it simply for what it was intended. As we think about climate change, and so much of fuel subsidies are price subsidies that accrue mostly to the rich because they consume more fuel than the poor. If you could revise that policy and instead pay directly to the population you're trying to reach, prices would rise for fuel subsidies, consumption would go down, and we might be able to impact climate change for the positive. So there's a lot of, that's just a really simple example, but there's a lot of real secondary effects of actually connecting people formally to financial services. So as I said, this report will be released actually in 2 weeks from today, and there'll be a full report plus a technical appendix so you can see all the assumptions that have gone into this work. So you can see that it's a robust data set and a robust analysis. And we hope that as you are the chief advocates for financial inclusion, that you'll be able to use this to bring more people within your government to be on side of accelerating the financial inclusion within your country.
Thank you very much, Jason. We're going to be looking forward to that report very anxiously, and no doubt it'll be very helpful as we move forward. And now if we could hear, Sean, from you and see how it looks from the private sector, as all these exciting things are happening, and you are certainly part of it in MasterCard. Please.
Thank you for the opportunity to participate in this great dialogue, and certainly look forward to the research that was just discussed. A little bit about MasterCard, although I think many of you know who we are and what we do. We operate in about 210 countries with over 1 billion cardholders and 40 million merchant locations around the world. And this topic is near and dear to our hearts because as a company, our biggest competitor is cash. And we really can't discuss moving forward to address the digital ecosystem without understanding the role that cash plays. In our view, cash is not a friend of financial inclusion. 85% of transactions around the world are still done in cash and checks. And cash is very expensive. Some of the research that we've seen suggests that cash can cost the government between 1.5% to 3% of GDP for the cost of managing and handling the disbursement of cash. So electronic payments clearly can be a key driver of financial inclusion. One of the best initiatives to move forward in enabling this type of digital ecosystem are the bold commitments that have been made over the years. The Maya commitments made by the public sector has been a foundation by which many of us can operate to build upon to achieve the objectives of greater financial inclusion. Prior to 2015, MasterCard had about 500 programs in 50 countries that generated about 150 million new consumers that were unbanked and underserved. In 2016, we decided to make a very bold commitment to add 500 million new consumers to the financial mainstream by 2020. I'm pleased to report that as of June of this year, we have already achieved access for 225 million new consumers, almost halfway towards the goal. In addition, this year, we realized we cannot look at financial inclusion alone by just looking at consumers. We must look at the micro merchants, small merchants, and SMEs. While we have 40 million merchant locations around the globe today, we have made a commitment to add another 40 million small and micro merchants in the next 5 years to address the challenge of financial inclusion. It is through bold commitments like this that we can achieve our goals and be ambitious in our goals. The only way we can do this is the work between the public and private sector to achieve this type of outcome. One of the biggest challenges is not only bringing those into the financial mainstream, but making sure that these products are ones that will actually be used, that they will actually use the funds put into the bank accounts. And that requires that we really do understand the consumer, that we understand what drives their behavior, and that we design these programs in a way that meets their needs and improves the quality of their lives. We can never lose sight of the consumer, and it brings a new definition to what we mean by know your customer. One of the biggest disbursements of cash, or of funds, I should say, to the financially underserved is by governments. About 30% of the funds that are received by the poor and underserved come from governments. And a lot of governments have made commitments to provide greater electronic disbursement of funds, and we need more and more governments to take on that goal and that challenge as well. And we've been working with a number of governments around the globe on how to do that in a cost-effective and efficient manner. So I think it is through these type of bold commitments from the public sector and private sector that we will make the strides that we're looking for towards greater financial inclusion, not only for consumers, but for small and micro merchants to bring about this change.
Thank you very much, Sean. Now, if we may please hear from Gloria Gandolini from the World Bank and see where this fits in globally in their strategy. Gloria, over to you.
Thank you. And Bula, greetings from the World Bank. Let me first start by thanking AFI and the Central Bank of Fiji for organizing this event and also for hosting this conference in such a beautiful place. And I'd also like to take this opportunity to recognize AFI's achievement of moving towards an independent member organization. That's a big step. Maybe what I can contribute is to put this in this theme into the broader context, and really let's think back why financial inclusion is so important for sustainable development. For a long time, international policymakers prioritized economic growth above everything else, and the elements of financial sector development that were part of that debate and that were widely considered as conducive to growth were financial stability, financial efficiency, and the depth of financial markets. That was really the focus. And it's true that the empirical studies in fact show the overall positive association between financial sector development and economic growth. But what has changed is that now it is widely accepted that economic growth by itself is not enough, especially if this growth is accompanied by greater inequality and increasing social exclusion. Without a financial system that not only is stable, efficient, and deep, but also inclusive, the development impact of economic growth is not going to be sustainable and will not reach all members of society. So financial inclusion advances sustainability and sustainable economic development through a number of different channels. Evidence suggests that basic financial services, which can be offered widely through a transaction, help people better manage their lives, plan for emergencies, and also increase their incomes. The positive impact of financial inclusion can be further strengthened as individuals and firms gain access to, and what's more important, regularly use other financial services. For example, credit to invest in education or new businesses, insurance to mitigate income shocks or climate shocks, savings or remittances to enable investments in health and education. So studies very clearly link financial inclusion to income growth at the bottom 40% of the population, what we at the World Bank call shared prosperity, to broaden economic participation. So we're also looking very much forward to the study mentioned by Jason, because I think it will further bring this message home. So this has led financial inclusion as being recognized as an essential part of the inclusive growth agenda fostered by the new sustainable financial goals, sustainable development goals. And for us, this is really a very, very important achievement. The work we do at the World Bank is fully aligned with the SDGs, and what we were very happy about is that, in fact, they identify financial inclusion as an enabler for 8 out of the 17 goals. So, in the interest of time, I will not go through each of them, but let me mention a couple just to give you a sense of how this links up to the theme we're discussing today. For example, Goal 3 on ensuring healthy lives and well-being includes the need to provide financial risk protection universally, especially to vulnerable communities. So we promote sustainable livelihoods through insurance products and programs, and through linking our operations on financial inclusion with social protection programs. For many people who are unbanked, digitized government transfers are their first entry point into the formal financial system. To give you another example, goal number 10 on reducing inequality has a strong link with remittances. and reducing the transaction cost of migrant remittances. And that's another focus of our work. In the East Asian Pacific region, the World Bank Group has worked with national authorities, in fact, to improve access to remittances and related financial services, and also to mitigate the impact of global de-risking pressures, which is one of the themes in these 2 days and which will be discussed further. We have also conducted research on the impact of the high remittances cost have on economic development in the Pacific Islands, highlighting issues of industry structure and the need for financial capability in the population, as well as improved access. So we truly consider financial inclusion to be a key enabler for reaching the World Bank's twin goals of not only eradicating extreme poverty, but also increasing shared prosperity, and also for supporting your country's own development goals. Currently, as many of you know, we provide technical knowledge, financing support to more than 40 countries in putting in place the regulatory framework, the policies, the infrastructure that is needed to accelerate financial access, improve financial inclusion, ensure greater usage of this access. And we project that the current World Bank and IFC projects that are relevant to the Universal Financial Access 2020 initiative will result in almost 600 million new account holders by 2020. But the reality is this is not just something that we're doing ourselves. This, in fact, it's a true partnership with other partners in the development community, be it the public sector, the private sector publicly, but really all of you that are here, because you're really the ones that will make this possible. So I think we're all excited about this new phase. It's not about advocacy anymore. I think all of us here are convinced that financial inclusion is important, but I think now it's the time to focus on these other challenges that will make financial inclusion sustainable. Thank you.
Much, Gloria. Now we're going to give Alfred, another chance to come back and round out the ideas from Afi, and then we're going to take a momentary break and get a survey from the audience on what you all think are the critical issues, and then we'll come back and we'll get questions, from the floor. Alfred, you've got a couple of minutes to.
Yeah, thanks very much, Daniel. I only can take a couple of minutes. I mean, the complexity of this issue would actually almost tempt me to, speak very long on this. But I would like to come back to two interventions here. Maybe first from Jason, what you presented. I think this is great news. I mean, from a research point of view, this is spectacular. When you look at finance, we have looked at finance from many sides. We had seen the old theory of finance where we all learned, that actually intermediation means that you do risk and maturity transformation and these things. That's the old time, right? Then we came back to what Professor mentioned, which actually is about information matters. And financial markets work different than, good markets. And that's why we need to make sure the institutions are there that, in fact, make it happen. That intermediation can take place. And we learned about moral hazard and, adverse selection, all these things. That was great. But now, with this, I think this is almost like a new theory of finance, because you will be able to identify the drivers, like digital identification. This is huge. I'm just reflecting on this from the outside, but I found it extremely interesting. And I think most importantly, this data gives us a justification for what we are doing. And this is fantastic. The other point, which is a more practical point, goes back to what Minister has shown us, namely to look beyond financial risks. I think what was mentioned, the idea to see that if there is a socio-economic risk which can lead to political risk is also something that I think this community is picking up. Just to give you this concrete example, the Alliance is invited to go to Basel on the 30th of September. There's an invitation from the chair of the Basel Committee, Professor Ingves and Queen Maxima. And every 2 years they bring all the heads of the standard setting bodies together, which I think is a great effort to highlight financial inclusion and the importance. So I think this data again is important, but what is more important, we as an alliance are invited to showcase what are the risks of financial exclusion. So I think this is an important point we can actually demonstrate to the standard setting bodies, that we might have to think about an extended risk framework which goes beyond stability risk, which goes beyond integrity risks, which actually tackles on these risks the minister has mentioned. I think that's a great opportunity, and we put this all together. You know, the drivers you're mentioning and the different risk dimensions. I think we have a lot in our rucksack that in fact I think can motivate standard setting bodies to look at the usual risks. I think this is an extremely important dimension. I would like to thank the minister for really emphasizing this. Thank you, Daniel.
Right, well, thank you very much. Okay, now I need the help of, we need to get the topics on the screen here. Let's see, there we go, okay. Now, you've got some buttons, but there are not enough buttons to go around. So if you don't have a button yourself, please turn to your neighbor to the right or to the left. You have a choice of either right or left, depending on how you lean, and share a button with a neighbor, and vote. You now commissioned to vote. And you need to choose. Not an easy decision to make because it's not so obvious and so you need to give us the biggest challenge, the one biggest challenge. How about that? Your stuff is absolutely mind-blowing, extraordinary. What you've been saying is just off the charts in terms of quality, in terms of what you're trying to do. I'm immensely impressed. The way you set it out. It's just ideal. This is something that we should take even to classrooms because you're an example of really social policy at large, responsibly, and connecting it with the financial market. I really would like to hear a lot more about I'm extraordinarily impressed, really. It's dramatic. Let's see, what do we have? Yeah, that's right. Balanced. Okay, all right. Well, all the things are important, right? I mean, one way to interpret this is that everything is important. But de-risking is a little less important than anything else. But otherwise, I guess de-risking impacts people or impacts jurisdictions rather asymmetrically. Not everybody gets hit quite the same way, so it turns out to have fewer people exercise about it. But everything else is about even. Very good. Okay. Now we actually have a little time because we have gouged into the lunch period. So we have a few more minutes. So we need to get, whoever has a big light there, if they could turn that light off, I would be very thankful. I can't see a darn thing. Hello there, the big light? Aha, fantastic, thank you very much. That's wonderful. That's wonderful. Now you can see us anyhow, so you don't need that big light. Okay, there are mics. We need questions from the floor, concerns from the floor. If you don't speak up, the rest of us will take the rest of the time and we'll discuss amongst ourselves. But we'd like to hear from you. All right, let's see. Who would like to ask the first question, make the first comment? Please stand up and go to the mic. And if you could identify yourself, please.
Thank you very much. My name is Charity Liwayo from Reserve Bank of Zimbabwe.
Bank of what?
I just have two questions. I believe that the gatherings like this one help us to exchange information and learn from others. So I would like to learn from you as a panel. the moderator identified the problem that we have as a market failure. That's why we now have to intervene, because we have 2 billion who are left out of the financial sector. So what it means is banks have not been including these people, and what we are to work on is to build an inclusive financial sector by making sure that banks are now providing financial services to those who have been left out. So what I want to find out is what is the issue of incentives important in this whole thing? Things like credit guarantee schemes and other incentives for banks to now go out and perhaps lend to these people whom they have been leaving out because they thought maybe they are risky, and we have a lot of measures that we are trying to put in place, but I just want to know more about incentives, whether they will have an impact in terms of increasing the numbers of people who are now accessing financial services. That's one. The other question that I have is on the gender gap that we have. The figures that we have show that the gender gap globally is about 9%, and in some of our countries they might even be more than that, as we have heard from my sister from Rwanda. So what it really means for me is that we need to do something extra to close this gender gap. And I want to understand from you to say, what type of measures do we actually put in place specifically for closing the gender gap?
Well, this is a group of interesting set of questions. Now, let's see if somebody has related questions so we can group the answers. Does anybody have something that's close to these concerns? Well, I guess I don't see. All right, so let's go ahead. Let's start with the gender thing. What are you doing on the gender in Rwanda on this issue? Here's yes. This is the gender neutral mic. I want to tell you, this mic is gender neutral.
It is.
Yes.
Actually, it could only be powered by a woman. The man failed. That's true. Thank you. Just teasing. Yeah. What is being done? I think really, as I put in my 4 steps model, it started by looking at the issues, looking at the reality, knowing what is there. In Rwanda, the national policies for women promotion and closing the gender gaps here and there is clear. Right in our constitution, it's enshrined. But in the financial sector, we started really by measuring and knowing what it was. Actually, in 2008, we had financial inclusion numbers, but we did not have them by gender, by sex disaggregated. So it's only after 2009 that we started realizing that we need to know how this financial inclusion fares if you take it through the lenses of gender. So that's really number one, knowing the gaps and understanding them. This can be through research, can be through surveys, but it can also be through monitoring, regular periodical returns from financial institutions, which we are now currently doing through an electronic data warehouse system that is fetching right from reporting institutions and is fetching information
you don't have to,
and
but if
data
you'd
that
like
is
to,
already sex disaggregated.
we can take other
so
questions.
that's one.
Well,
Then second is, I'll say the incentives. Actually, what we realized is we may not really need much of these incentives as a solution. I'll tell you why. We've always had a women guarantee fund in line with all those national policies I mentioned. We used it even to house it in the central bank some time back before I joined. I think we handed it over in 2011 or thereabout. Today it's being managed by an institution which is it's a business development guarantee fund. But the issue still remains with that fund being unutilized. So we started thinking, what's wrong? Is this really the issue of coming up with solutions like that that is going to make it happen? We actually realized that clients who are taken through that route, financial institutions might not really feel like committed to going through that route because it's procedural, it's really very heavy, and when you have a case of a defaulting female client, then calling on the guarantee can also be hectic, and I mean, there was a lot of issues. So then we realized that we might not actually, we may need, but this is not the solution. And what we are now trying to figure out is how to really make the market value of the female market segment visible to the financial institutions, because there is. We've seen cases where Women's World Banking has come up with cases. We've seen cases, I know a bank in South Africa, we had that experience shared in one of the conferences we organized back home. Really people telling you how single-handedly they really moved these numbers on female clients just by convincing the board that there is market value in serving them. Actually, it might be costly, but you just need to be smart. So how we are doing it, we are creating linkages. You know, there is this graduation system. We have, the Finscope study has shown that when you take informal channels, women are majority in that space. And actually that's why if we include formal and informal, women financial inclusion goes up to 83%. So the issue is how do you create linkages from those village saving groups, linking them to the SACCO system at the grassroots, linking them to banks through digital financial services, so that you graduate them. Because they have been supported by people like Care International, like so many other players on the ground, they have been educated on saving, on financial discipline. Really, they are really bankable. Only that they are tiny and maybe their income flows are not sustained or whatever, but you need to graduate them as they go through their cycles and link them up. So that's what we are currently seriously looking into, how to create those linkages through the circles and through the digital financial services. And I think we are getting there. Thank you.
Thank you very much. Gloria had some interesting comments on this issue.
Yes, very quickly, three points on the gender gap. One is that this is a common issue, a common challenge across the globe. So even if we've seen the numbers growing in terms of having a financial inclusion grow, this gap is consistent across the world. I think Mexico is the only country that actually where the gap has closed. So that's one point. Second point is from the experience of the work we've been doing with over 40 countries. One thing that has become clear, is that to deal with this challenge, it's not something that one can assume that it will just happen as the National Financial Inclusion Strategies or the implementation is done across. That each of you looking at your country's circumstances and the situation has to actually very explicitly have actions that deal with the gender gap to be able to deal with it. And the third point is that that this is really something that has to be tailored to each country, because many times there's cultural, economic, and religious circumstances specific of that country that then make it harder. So it has to be really an explicit effort. For example, from the work we've done, one of the examples is in a couple of countries. What came up is that for women it was very important when they opened the digital transaction account to have the first meeting face-to-face. And with that, they could ask their questions, they could understand, and then they were fine when opening the account and moving to the digital world. But that step was critical. So just the message that this is a common challenge and that it has to be explicit in the implementation work.
This is a very important point, which I think Gloria has brought out, that in the gender area, you find things happening in the financial world which originate elsewhere. They originate in the social world, in the society, the structure of society, tradition, religion, what have you. And so you find that reflected in the finances. It didn't originate in the finances. Now that changes the nature of the policy design that you need to, how you get at this. And this comes back, let me ask the minister here who was commenting to me that there is something like this going on right here. If you'd...
I think the issue is about mainstreaming gender issues in government policy. So, for example, there should not be the sense that there's a limitation to, for example, what women can do. So when the Minister of Agriculture is here, when his field officers go out, they should not only think, and then they don't think, that only men can do farming. Some of the best farmers can be women. Some of the women in Fiji are the ones who go and collect, seafood. So how do you turn that? Then they may do it for domestic uses, and some of them actually do it on a commercial basis. So if you're able to mainstream gender into government policies, you'll find it falling into also private sector too. So in terms of your financial inclusion policies, both in the private and public sector will essentially automatically translate into that. And as I mentioned earlier on, if you have specific laws, whether it's a constitution or various other laws that actually prohibits you from discrimination, then the question that the lady raised about how some women may constantly fall behind will actually get addressed. I think that's very critically important.
Right. Now, there's some data that show that, of course, women tend to interrupt their work lives because they have children. Men don't tend to do that. We don't tend to stop working because we have children, because we don't have children. But if it turns out that women indeed stop their working lives while they have children, they're likely to have a lower lifetime income, and therefore they're likely to have lower savings, and therefore they have lower capital accumulation, and therefore they own less of the assets, and therefore they have less impact on the banking system. So, there are the things that feed back on each other, which one needs to understand, because in some sense, they're immutable facts of nature, but in another sense, they are modifiable eventually. So this is very complex, and Afi is going to begin to get more into these things as we understand these better, and particularly on how this affects the finances and the finances of the excluded, and the excluded women in particular. Now, there was a second part to the question had to do with incentives, but I'd like to see if we don't give somebody else a chance. There must be at least one more question. I see there's somebody here who has something to ask or say or comment. Please, go ahead.
Okay, good afternoon. I'm from Mongolia, Financial Regulatory Commission. I'd like to ask a question, and so it is really good thing to talk about financial inclusion. But I do believe everything has its cost and its value, and also it has a risk. When we talk about financial inclusion, on the other hand, we have to talk about financial exclusion. Why people are not intended to attend all this financial framework. I do remember what happened in 10 years back, which started from the United States global financial crisis. Somehow everyone is pretty much affected in the financial market, and so some of the big banks, it was too big to fail. That's why the government and Congress adopted bailout program. But according to my understanding, there are many developing worlds. There is a central bank is regulating all this financial market, and there is no other competitors. But I just wonder if all these people just is included in the financial market, and so what's the risk over there? And so could you predict that kind of thing? And so would you have, what would happen? Now, of course, on the other hand, there is many positive things, and so how do you, evaluate the risk, and how do you predict it if all the unbanked 2 billion people somehow involved into all this financial sector? I'd like to ask this question from the professor, School of Kennedy. Thank you.
How about that? Well, so you're going to developed country macro question. Let's see what this gentleman wants to ask. Go ahead, please.
Hello, everybody. My name is Aziz Kholboyev. I'm from National Bank of Tajikistan. And my question is to Mr. Alfred Hani. And in addition to the previous question, I would like to add that how do you think, in order to reach those 2 billion unbanked people, what is the role of the AFI with other international financial organizations? And in order to reach to those 2 billion unbanked people, don't you think that there is also a matter of trust to the banking sector? Thank you.
All right. And in particular, who was this directed at? The question was directed in particular?
To the panelists or...
To the finance minister, okay.
Yeah.
Very good.
Hello, my name is Kelvin Kizito from Bank of Uganda, and a graduate of Fletcher School Leadership Program for Financial Inclusion. I have a comment and a question. My comment is that I think it is hard to talk about sustainable financial inclusion without talking about the youth, because the youth are so many, and in most developing countries, most of them are not employed, yet in access to finance. So my question is, are there any policy measures or plans to make sure that youth are financially included in the monetary and financial system?
Okay. All right, we've got some interesting questions here. So let's see. Let's turn with the minister first. We had a specific directed to you from the good lady. What? You have some. Okay, Alfred also has. So we have 2 answers already. Let's make sure that they're consistent. Yeah, go ahead.
This is the question from Mongolia. I thought she had asked you.
Well, you see, I as moderator, I didn't want to.
No, I think it is perhaps a misunderstanding, if I understood your question correctly, that if you include people, mainstream people in the mainstream financial sector, then they would be affected by the GFC. Is that your question? Or they could, when you have a GFC, it could be affected.
Once this financial market, the institution is not that strong enough, that the exclusion is, spread out. If the ratio between exclusion and the financial institution's capacity, there is some kind of gap, but when you include more and more people, what's the risk? Would you have that kind of research and prediction what would happen in future? Somehow we involved all the people. That was my question.
If I could use Fiji as an example, there was a World Bank study done of the Fijian economy back in 2006. And essentially, the report said that 1/3 of the value of our GDP at that point in time was in the black. In other words, it was a black economy. So all these cash transactions were taking place. Apart from the fact they're all cash transactions, they weren't even, in fact, even incorporated in our total GDP valuation. So we're missing out on a lot of people. Now, financial inclusion from our perspective also means mainstreaming people into our ability to monitor, our ability to count, our ability to assess those types of transactions and bring them into the fold. And in particular, from government's perspective, those people who are at the lower end of the socioeconomic scale who may not actually be able to receive the benefits from the financial institutions. I'll give you an example. There are a lot of people in Fiji, for example, because they do not necessarily have a good asset base, they are not part of the mainstream financial system, or some of them may actually be employed, but they do not necessarily have a good asset base. So mainstream banks, for example, don't lend them money. For example, personal loans. They don't get personal loans because they don't have enough collateral. So what do? They go to money lenders. Money lenders can charge up to 25%, 30%. I've heard notorious stories about 50% interest rate because they are desperate. They're not part of the mainstream financial system, or they do not have enough collateral, so they go to these, what we call maybe non-traditional institutions. And therefore, given the high rate of interest, they're never able to improve their quality of their financial position. So it includes a much bigger perspective, and that is government has two challenges. One of them is to build up the asset base, and how do we do that? So we look at things like improving the rate of home ownership in Fiji. That's one of our key driving policies at the moment. The others, of course, is to bring people into the mainstream financial system. Now, to say that, for example, if you bring more people into the mainstream financial system, we would be affected by something like the GFC. We would, in any case, even if you weren't part of it, you still get affected. So if, for example, there's a downturn in global economy, 35 to 37% of our GDP is contributed by tourism. 67% of our arrivals come from Australia and New Zealand for tourism. If there's a downturn in their economy, obviously it will affect us. Not just in terms of room occupancy, but the person who may be buying coconuts, or who may be selling coconuts by the roadside, who is not, banked, but they will still get affected because there are less tourists buying the coconuts. So unfortunately, the global financial system is such that an event, unscrupulous as it may be, or completely grossly negligent that may be taking place in New York, can actually have an impact on us. And they obviously have a lot to answer for. But I hope that addresses your issue. I saw you shaking your head, so maybe I'm not answering your question, so perhaps somebody else can answer that. There you go.
Pursue this just a bit, if I may, because these secondary effects are tremendously important. Indeed, when China stops growing or slows its growth rate from 16% to 6%, and it turns out to stop buying copper and stop buying other minerals, it turns out that all the copper producing, all the minerals producing countries find their income goes down. Now, the first thing that happens is if there's foreign investment here, it's the foreign investment companies that take the hit. But the second round, of course, is that they pay less taxes. So that affects the local economy. And the third round is that there's going to be less employment. And indeed, then if there's, and if the Chinese tourists don't come as much, then in turns you find out that there are no coconuts sold. And so the second round effects are really externalities. We need to take them into account, and we need to count them. We need to be very aware of these second round effects. And I'm being told that we have no more time. Time out completely, or can we finish? We can take another minute and a half, right? Yes, we'll expropriate a minute and a half from lunch. Very good. Okay, Alfred, you had some thoughts that you wanted to say a few more words. We'll give Alfred a minute and a half. And we've got the gentleman MasterCard. We give Alfred, you got to hold off. We give him first a minute and a half here.
So I think the global financial crisis point, as well as the bank incentive point, are somewhat related. The global financial crisis obviously caused ripple effects and had a disproportionate effect on the poor and underserved. And when you look at financial inclusion and some of the challenges that we have today with banks adopting it, some of this relates to the cost of maintaining a deposit or current account, particularly in a tighter regulatory regime, concerned about some of the downstream effects of financial crisis. So from an incentive perspective, we really need to make sure we examine those policies that would relax some of those standards based on risk to address financial inclusion for the poor and underserved. And that could be through incentives, that could be through loosening some of the capitalization or deposit requirements, et cetera, or reserve requirements associated with the banks. But also, what we're seeing in the fintech space is a number of innovative companies seeking to serve those constituents who are not being served. And we should provide a platform and framework and policies that encourages that adoption because the banks may not be able to address all of the needs of the financially excluded.
Thank you. Jason, you would like to comment somewhere from your point of view and on these issues?
Well, I can
broadly?
just add to maybe the gender point because reinforcing both Melinda's message and then our ladies on the panel who both made super points. There's a lot of effort going in to solving the gender gap and really understanding where women fall off the adoption and usage. I think AFI has a gender working group. There are plenty of international organizations, including the Gates Foundation, the World Bank, CGAP, and others that are really trying to understand how to include women. And so I would urge you each to reach out to those organizations. And then finally, I would like to say that we are seeing some real improvement in East Africa where there are more mobile bank accounts than there are formal bank accounts. We actually see that gender gap is closing because it's giving women access to financial services in a way that's convenient to them, that's where whether they can access that at home or in wherever they're in working environment, and it's sort of providing them the convenience and the privacy that they weren't able to get by visiting a bank account. And so I think that's actually encouraging news, and hopefully we'll see more of that as women get greater and greater access to financial services around the world.
Yeah, you know, I mean, fundamentally, as the men get to 80, 90, 95%, and the women are still at 65 or so, the women are going to rise, right? I mean, eventually it's going to catch up. It's a Kuznets curve kind of effect. So it's got to get better. But we got to work on it. We can't assume it's just going to get better. We got to work at it. All right, last, we all want to say more, but I think last word to Alfred, and then we really have to break for lunch because otherwise they'll hang me here for not having kept it all on the schedule. Alfred, what are your concluding thoughts here?
Maybe they hang me now if I speak too long, so I try to be short. Just to pick up on two of the questions. Maybe the first one on the gender from Charity, Deputy Governor Charity. Quickly, I mean, Monique alluded to a couple of things that have happened in Rwanda, such as collection of gender disaggregated data, sex disaggregated data, but also financial education programs for women. I think this is exactly what you also find in the AFI Action Plan on women's financial inclusion, where we are now trying to drive towards these solutions more on a global level. So I think the high-level committee is working on this. Footnote on this, allow me to say so, I think what is also important is that we think about the mindset. I said that in the press conference already. I mean, it starts with that women also trust that men can also make a qualified statement on these issues. So not only women can talk about this, I think it's very important. Seriously, and it also means that, I mean, I was a bit surprised, of course I don't intervene in these things, but when we got the nominations for the committee, Women's Financial Inclusion Committee, from our member institutions, the requirement was high level, but we only got female deputy governors into this. I mean, there must be a reason for it, but I don't see it as a women's issue. Anyway, I think I've made my point. Maybe you want to have more gender diversification even in your committee. But let me come back. Let me come back. Yeah, but I mean, honestly, the other one is really on a comment from Tajikistan, and the answer goes together with what Charity asked on the incentives. If your question from Tajikistan, what can AFI do to work with international financial institutions, is related to multilateral institutions like World Bank, the answer is clearly that we have an agreement with World Bank that this support is wrapped around the implementation of Maya commitments. So I think this is one which is visible, and some of you are really involved in this. And we are even discussing other forms of, collaboration. We had a meeting yesterday. We might come up with new ideas on how we can collaborate. If your answer is directed towards international banks, well, then the answer is different. And it goes back to Charity's question on the incentives for banks. The question is, will banks play a role in all this in the future? I mean, the future of commercial banking looks very different than maybe 10 years ago. Do we need, can I say that? Do we need to discuss these incentives in the same way as we have discussed them before? And the answer lies, look at the Financial Stability Board. That's where the answer lies. They are reviewing their definition on shadow banking. Shadow banking was from the evil, wasn't it? 5 years ago. Now we are looking at a new definition of shadow banking, recognizing that there's a lot of non-bank financial intermediation going out there, which makes sense, and which is good for financial inclusion. Of course, we want to separate out everything with regulatory arbitrage, isn't it? But there we have apparently a new trend, which is already reaching the standard-setting bodies. So the future of banks in this has to be maybe looked in a different way. And again, yesterday we talked about the true disruptors in this field. They will come in and they will change the landscape. So maybe such incentives no longer play the role as they have played before. Don't kill me for this. Thank you.
Thank you, Alfred. Now, we need to say Bula one last time to be really happy here. Let's hear it. Bula! There we go. One more time. Bula! All right, good. Have a good lunch and see you later.
The Pacific Islands Regional Initiative looks forward to welcoming you for Pacific Night this Friday at the Denarau Island Convention Center. Bring your Bula smiles and get ready to have
Ladies
a
and
wonderful
gentlemen,
time.
Please, before you leave,
See you there.
Just a minute of your attention. Please, ladies and gentlemen, just a minute of your attention before we before we excuse you. Right? Can we just give our moderator and our panelists another round of applause? Thank you. Please, if you can take your seats just for one very brief announcement, ladies and gentlemen. It's actually time now for the AFI Marketplace. We'll have the AFI Marketplace, which is at the Sheraton Ballroom A, ladies and gentlemen, which is close to where we had served morning tea. That's where we'll move from here, not directly to lunch. Not to worry, you get to enjoy a few things at the AFI Marketplace. It's very important that you visit the marketplace to familiarize yourselves with the services and products that AFI offers for its members and partners. I've been told that they have some great gifts and giveaways for those of you who visit the marketplace. Not that that should be the only reason why you visit, ladies and gentlemen. Please go there so you can get more information. However, immediately after that, we'll break out for lunch, and we kindly request those of you who need to really get some more information about a few other things to visit our help desk so that they can assist you. We also have the Member Zone help desk available for members interested in updating and learning more about the online platform. Ladies and gentlemen, after lunch, we have 2 breakout sessions, and in between we have a coffee break. But following the breakout sessions, we will converge back here at the DICC. We have the public launch of the AFI data portal, or the AFI data portal. And parallel to this launch, we have sessions running for the AFI Advisory Board meeting. These sessions are by invitation only, as well as the dialogue between telecom and financial regulators on collaborative approaches to promote digital financial services. Following the public launch, we will have a very exciting session. It's the Financial Inclusion Quiz Show. It will be a very interactive session with lots of fun, so please don't miss out. And they've got some great giveaways as well. Also, ladies and gentlemen, for your dinner vouchers for the AFI members, please collect that from the Bula desk. Take your ID tags to identify yourself. And for the transfers, for breakout sessions at the West End, there will be transportation provided. I know you've done your voting. Please, your voting devices as well as your translation devices, if you can leave that on the seat, and we'll collect that for you. Once again, thank you for your attention. Please enjoy the marketplace. Naka.
Pacific Islands Regional Initiative looks forward to welcoming you for Pacific Night this Friday at the Denarau Island Convention Center. Bring your Bula smiles and get ready to have a wonderful time. See you there.